everyone, this is Moshe, the Electric Israeli, and thank you for joining my channel. If you're new, please subscribe and help me change the world one electric car at a time. Thank you to all my patrons and those who order their Tesla using my referral code. And on a wonderful news from China regarding Tesla stock went up by $9.07 yesterday. See what happened today. And the news from China is basically twofold. China is probably going to decide that all rideshare cars must be electric or plug-in hybrid. I'm not sure, but definitely electric. And that is fantastic news. Rideshare could be Lyft, Uber. No, they don't have Lyft there. Uber, taxis, whatever that is, limousines, whatever public rideshare vehicles have to be electric. So that is fantastic news for Tesla or anybody else who is producing electric cars. Also, as you know, Tesla is enjoying there's no penalty, there's no tariff penalty on Tesla with all this stupid trade war we have. And also, as you know, Tesla very exceptionally is operating in China without a joint venture. They're on their own, so to speak, in China. So all this great news and others caused the stock to go up, and of course it's speculation and hope. But that it's not enough for the gang in CNBC. Let's watch and I'll be right back.
Tesla topping the tape today, the electric automaker surging nearly 4% on a report that China will require all ride-sharing vehicles to be electric. This coming as Tesla's Gigafactory in China reportedly nears completion, while demand for Model X and Model 3 cars in the country ramps up thanks to a 10% tax credit from the Chinese government for EV ownership. Meanwhile, Tesla's gearing up to report earnings next Wednesday. The company missed delivery targets for the third quarter. So how should investors be preparing for this tape? Are you still short, Tim?
Still short. I think the cash flow issue is really what matters most. Remember, Model 3 is supposed to be the every man and woman's car. It's supposed to be affordable. It's supposed to be $35,000. And it seems to me that that's not something they can do. They've never been able to produce this car comfortably and profitably. And then the S and some of the cash cows, I think we've seen demand year over year come down dramatically. I don't think right now that Tesla is the savior for China. And at a time when I think China is looking to establish their own players in tech land, I don't think they're going to be giving away the farm to Tesla. And in fact, I would argue at a time when we're having a major standoff with China on technology and the 21st century, I don't think they're going to be backing Tesla in a way that means demand in China.
I would agree. I mean, I agree with you. I mean, I agree that China probably has its own interests in perpetuating and helping its homegrown industry. But at the same time, Tesla is one of the few companies let into the country without a joint venture, right? I mean, it has a gigafactory in Shanghai, and it didn't have to partner with anybody for it.
Well,
that's pretty extraordinary in terms of just the signaling to the world of letting Tesla in.
And China's done a good job of letting people in who they've wanted to, basically help build an industry and then show them to the door, or at least make it be under China's terms. I'm sure that's what's going on.
And plus, you have another interesting angle is you have the tax credits going away here, and they're showing up in China. At the end of the year, they're done in the United States. But you also have a 25% short interest, and Tesla is above its 50, its 100, and its 200-day moving average right now. So I think it's about good news and positioning in this one as well.
The question is how much of what might be coming that's better is already priced in. We had that June 3rd low at 176. It's trading at 250, about 45% off the low. At this point, I think you fade it.
I agree with Carter. I mean, listen, and Steve makes a great point. I think that's what Tesla has going for it is 36 million shares or so of short interest, and people are covering. October 3rd, this stock looked like it was going to go down below $200 when they reported those delivery numbers. The stock was down 6%. It got a lifeline over the last couple of days. That's great. But into October 23rd, if this stock continues to levitate, I think you get out. And if you're aggressive like Tim, I think you can play it from the short side. Absolutely.
Would you play from the short side? I mean, you said you'd
I mean, if you had to be directional, I'd rather be short than long.
Wow. What will cause you to reevaluate your short at this point?
They need to show that they have a sustainable business without capital markets being wide open for them and not caring about profitability,
this is a
deliveries,
long-term short
corporate governance. Yeah, this is a structural short. This is a company that I think has significant issues in terms of their ability to do what they said they're doing. It's not about the technology. It's a beautiful car, by the way. And, Elon Musk is somebody that's done a lot of great things for this country. But I still have major issues with the governance and the disclosure and the level of transparency around this company.
Yeah.
There was a great Vanity, I'm predisposed to read the Vanity Fair.
I know.
I like the long form
it's
articles.
Obvious. It's obvious.
Well, I take that as a compliment.
Yeah, it is.
And I know it's not meant to be, but I'll take it that way.
I like the math.
There was a very interesting piece about, Mr. Musk and what's going on. And if you read that, you're saying to yourself, not only is this a $200 stock, it's probably a closer to $100 stock. But I digress. I think Tim's right. I think in October 23rd, you take profits, and if you're aggressive, you short the name.
This is a stock where both the shorts and the longs can be right? It depends on the month. This stock is up 20% in 2 months. So it takes the heart of a lot of people, and then it could drop another 20%. So there's enough room for everyone to be right, and I get the point of selling it, but the problem is a stock like this gains momentum. It looks like it's building a quasi-base right around these levels. So I'll take the other side of Carter because it's a trading show. Forced to pick, I'd rather be a buyer than a seller now.
That's a would
Trade
you
it.
rather. It's a trader to fade it. I can't. The game starts to creep up on me.
That's
a would
they
you
can
rather.
be very confusing. For people, too.
I still think just, if there's a closing point here, or maybe this won't be the closing point. I don't think the stock price reflects anything. I don't think the stock price reflects fundamentals. I don't think it reflects the balance sheet. I don't think it reflects true demand. I think the stock, if they were to find themselves in, I think we've actually already started to see restructuring, but this stock could have major issues, and then suddenly you wake up one day and you see that on the tape, and it's a $200 stock. I think that's the way this thing trades.
I really don't know what can Tesla do and what can happen to Tesla here in America and around the world that's going to make these guys happy. Obviously, I made so many videos just like this one, saying a few things, showing you CNBC commentary and all that, and it's the same theme. It doesn't matter. It used to be sales, it used to be production, it used to be deliveries, it used to be this, it used to be that. Anything that they do, they're gonna find something negative to say, something bad to say, something, like a party pooper. Anyway, so look, do they make points about cash flow, revenue? All these things are, you can bring up anything and it's legitimate, but I reject the venom on an American company who makes cars in America for Americans and sells them in Europe for now, to be treated this way. It's very, very upsetting, but we don't care because we are going to continue, and Tesla is going to continue to be great success. Thank you guys for watching. Leave me comments below and I'll see you tomorrow.